So I think that this negotiation is likely to get nastier, and then it will get, I would say, easier or probably solve itself quicker than we believe.
That was Daniel LaCalle, world-renowned economist and multi-time guest on Bills with Luke Scorzel, speaking on the China-United States trade war. Now, this interview is very important because this coming weekend on Saturday, President Trump and Chinese President Xi Jinping will meet at the G20 summit on the trade war. Earlier this week, United States Trade Representative Robert Lighthizer and Chinese Vice Premier Liao He spoke by phone, presumably about the trade war, so you can expect things to happen this weekend when Donald Trump and Xi Jinping head into that G20 meeting. So stay tuned for today's interview with Daniel LaCalle on what exactly could happen, what he views as going on in the trade war, and more. So stay tuned and keep listening. Remember, listen carefully, think critically, and conclude thoughtfully. I'm Luke Scorzel, and you are listening to Bills. Now we're coming into a conversation that Daniel and I were having on China and the United States economy, in which Daniel seemed to imply that the United States had a stronger economy than China. If you'd like to listen to the rest of this conversation, then head on over to episode 53 with Daniel LaCalle called Trump Trade in North America, in which we transition into this topic. So without further ado, here's Daniel and I's discussion.
The positive trend of the cycle gets extended because of the factors that many economists believe are negative. Let me explain this to you. Many economists believe that a very strong dollar and that low yields and the inverted yield curve signal recession. What they also signal is capital flowing into the United States relative to the rest of the world. So one of the things that may happen is that into the next elections, the U.S. economy weakens, but does not weaken enough for this doomsday scenario to become real. Whilst at the same time, what really weakens is the rest of the world, emerging markets, Eurozone and China in particular. So the comparison for the average voter will be, we are better off.
It's interesting there that you say that the United States is actually doing as much stronger than specifically the Chinese, because we are still in the midst of this tremendous trade war with the Chinese, with millions of dollars and billions of dollars of tariffs being levied by each of the countries. And then most recently, we had the Huawei ban coming from the Trump administration. Why do you say that the United States economy is doing so much better than the Chinese economy?
It is a much more dynamic economy. And it's an economy that is much, for example, in the United States, about 38% of the GDP is intellectual property. It's a big figure. Technology is very, very important. So it is true that those things that we are talking about do have an impact on the old economy. But a service economy like the United States and a much more dynamic economy in which, for example, the credit to the real economy is not necessarily driven by bank credit, like, for example, the Eurozone. Less than 20% of the real economy in the United States is financed by the banking system, whilst it's about 80% in the Eurozone. And the impact of government spending on the U.S. economy is much smaller. And government spending is a key factor in some of the economies that we're mentioning of misallocation of capital and also of making the economy less dynamic via debt-financed current spending. So the U.S. is more robust from that perspective, and also has differentiated factors. It's almost energy independent by now. It is a net receiver of capital, and continues to be the lowest risk asset.
Maybe this is going into more speculation, but what do you see as the ultimate result in the trade war between the United States and China that has been going on for over a year. I think we recorded one of our last conversations kind of at the beginning of when that trade war was getting going. So what do you see to be the end result here with the United States and China?
I think that the end result will be a negotiated deal in which both parties will give up some of the demands. We need to look at it as what it really is. This is a negotiation between the biggest supplier and the biggest customer. So when you have a business and there's one supplier that is your biggest supplier, you treat that supplier trying to sort of press as much as you can to receive discounts. No? If you are a supplier and one company is your biggest customer, you treat them very well. You treat them to holidays in the Bahamas. So what I'm trying to say is that at some point, the situation between China and the United States has to get closer to what it really is. The US is the biggest customer, China is the biggest supplier. The biggest supplier has to concede some more to the United States because China does not have a trade surplus with almost any of the other big economies with which it trades. It actually has a trade deficit with many of its major customers, except with the United States, with which it has a massive trade surplus. So I think that there will be an agreement, but because both sides start from the premise that the other is behaving in a way that is not logical, it is going to likely take longer than what we would like it to last, and it is likely to get nastier before it gets better. But what we find in these processes is that they look like unsurmountable, impossible to solve, and getting worse and worse and worse. And then suddenly it becomes easier. No? So I believe there will be a negotiated agreement, because if you think about it in the long term, China and the United States need to get along.
Now, I want to take a quick moment to inform you about 3 interviews that I have coming up. It's my cryptocurrency series with Kelly Weaver, who's a public relations expert on cryptocurrency, Misha Yurchenko on all things Bitcoin, blockchain, and cryptocurrency, and Mark Boron on the legal aspects of cryptocurrency. So head on over to iTunes, Spotify, Stitcher, theedgeofideas.com, and subscribe wherever you get your podcasts for that coming up. Now back to the conversation.
So I believe there will be a negotiated agreement, because if you think about it in the long term, China and the United States need to get along.
I mean, obviously, I think Trump would like to have some kind of negotiated victory before the election season starts off again, because that will be one of the main points, I believe, on trade. If he can't point to this whole trade war and say that the United States came out on top, and looking at it now, it seems like what you're saying, it just looks like it's becoming this insurmountable problem and challenge that we might not be able to get past in time for that. But you say that there maybe is hope still.
I think that there is. If you think about these things, right now, you have rhetoric, no? Mm-hmm. China just released a white paper saying that everybody gets hurt, that the United States is going to suffer dramatically because of the trade war, all these things. The United States administration probably feels quite strong. Yields for treasuries are low, the dollar is strong, the economy is doing well. So right now, rhetoric is winning over probably logic, no? But there is a point at which both sides will sit down, and probably it will be the 2 presidents, no, in a dinner of steak and chocolate cake somewhere. They will say, look, seriously, what China needs to do is to improve the situation with capital controls, with intellectual property, and with the imports of soya and natural gas. So that is not difficult to achieve. And the United States can reach positive agreements on that. Right now, You see, look, the mainstream, particularly of economists, are talking to China as if China does not have any problem, but it is not true. You cannot have an economy that is strong and that is an important driver of economic growth long term with that level of overcapacity, that level of debt, and capital controls. You cannot. So we need to bring China to the logic of getting rid of capital controls, getting rid of the protectionist measures, particularly the lack of division between powers, legal and administrative powers, etc., and political power. And we need also to show that there is an advantage in getting less levels of growth, but more robust levels of growth. So avoid the pitfalls of the model that they're following. So I think that this negotiation is likely to get nastier, and then it will get, I would say, easier, or probably solve itself quicker than we believe.
We can only hope. And one last question that I have for you on this topic is the United States announced, I think a week or two ago, or in mid-May, that they would be banning Huawei, which is one of the largest smartphone suppliers in the entire world, that's based in China, from distributing to the United States and working with businesses within the United States. And this is a move that didn't seem to be so much targeted in the trade war as it was that the United States and the Trump administration seemed to be concerned about the company's closeness to the Chinese government, especially as they are a smartphone company and they do work with the networks and connections within the United States that have access to a lot of data on United States citizens. But in the context of the trade war, do you see this ban as something that China will immediately respond to? Do you see it as an important moment in this trade war?
This is this episode is not the first episode. It's a response to previous episodes from China. Remember that I recommend to the people that are listening to us to Google businesses banned in China, and see the list of technology companies, networks, etc., that are banned in China.
Hopping in here for a second, so you don't have to Google it, although you can Google it. Here's a list of some of the companies that are not allowed in China, most of which are internet companies. We have Facebook, Twitter, Instagram, Snapchat, WordPress, so you wouldn't be able to access this website or any of this content in China, since WordPress is not allowed. Several Google services, including the Google search engine, YouTube, additionally the New York Times, the Wall Street Journal, Netflix, Hulu, Prime Video, Spotify, and Dropbox, just to name a couple. You can check the link in the blog post on theedgeofideas.com for an entire list. China has also talked about blacklisting other companies, including Apple and Cisco. That was a few years ago, according to Reuters. So nothing new, but anyways, back to the interview.
Networks, etc., that are banned in China. So this is not something that we have not sort of seen in before, and that is definitely not something that is different from what American companies are suffering in China. So I think that at the heart of all of this lies the problem of intellectual property. About 70% of the software used in China is illegally copied from the United States. And about 87% of the forfeited goods that are seized at the border in the United States come from China. So there needs to be a clear and evident action from the Chinese government in terms of the independence and transparency, in terms of intellectual property, and in terms of the utilization of data. Being close to the Chinese government, obviously, is something that you cannot change in companies that, if you look at the Chinese stock market, well, the vast majority of the large companies are either extremely close or are either creations of government officials or they are state-owned. But that's where transparency, independence, and clear commitment to implement measures to defend intellectual property and individual rights to data, etc., come into form. And I think this is a technological negotiation. The same way that China has banned many North American, many US companies within its territory because of allegedly the same reason. I think that's what we're seeing now is a sort of response to that. But I don't think that the solution is to ban Chinese companies in the United States or to ban US companies in China. I think that the solution is to have a much more robust, much stronger and transparent legal system and intellectual property rights system that ensures that when I use a product or a service or the internet, whether it is in the United States or it is in China, I am going to be safe, or at least I'm going to be confident that that information stays with me.
So, I mean, and that was ultimately something that I was thinking about over the course of your answer, is that regardless of whether China has levied multiple bans on companies in the United States, is it then ethical in the United States' perspective to say, well, then we're going to sink to that level and start banning companies that are coming out of China? Maybe morally that's a different question than it is economically, because
I agree that the solution to somebody's protectionism is not to impose the same level of protectionism, because it becomes a sort of a dog wagging its tail and in circles. Now, what is the problem? The problem here is that U.S. companies are not the U.S. government, and in many cases, like many of the technology giants, they might even be openly critical with the U.S. administration at one point, like many of them, if not all, are today. No? Yeah. That is not the case in China. And we need to understand that it's not the same to have an open system when you have those elements of property management and stakeholder levels completely detached and clearly separated. So it is a very, very difficult debate. I'm not saying I dislike protectionist measures, because protectionist measures don't help improve free trade. What they tend to do is to justify somebody else's protectionism. But it is not simple when the connection between government and the companies is so intense. And I think that all of us can understand the difference between a Russian company and a French company. Even a Russian state-owned company and a French state-owned company. We understand that there are significant differences in terms of the objectives, the risks, the opportunities, if one would be or not be allowed to conduct, for example, M&A transactions or strategic sector negotiations or investments. No, I think that obviously there's always going to be some level of, let's say, at some point there is a very thin line of whether the government that is close to the company or the company that is close to the government have the same long-term strategic goals that we as the United States, the UK, or something like that have. You know what I mean? Mm-hmm. It's not easy.
Yeah, no, it's not. It's a very complex topic, and so I'm happy to have you here to help break it down for our listeners. Again, that was economist Daniel LaCalle. I hope you enjoyed that conversation, and I hope you will think about what he said as we head into this weekend's summit between President Trump and President Xi Jinping. Now, I have more episodes coming for you, as you heard, the cryptocurrency series with 3 experts in different areas of cryptocurrency, blockchain, and the legal ramifications of the two. So if you want to hear that, then head on over to theedgeofideas.com/subscribe and subscribe, or go to Apple Podcasts or wherever you get your podcasts and subscribe to Bills with Luke Scorzel. Those episodes will be coming and they will be good. For that, I'm Luke Scorzel and you are listening to Bills.